We'll get into some of the crypto stuff. Sure. Let's just talk a bit about the broader state of fintech right now. It's a bit of a grim picture. Funding has fallen off a cliff. There's not really many IPOs happening at this point. What happens in the space this year?
Yeah, I think actually I would look at it opposite. I think it's a phenomenal time to build. Markets are, if you think about it, investors are the noise in the market. But if you cut out that distraction, you're getting the best talent in the market right now. There are talent who used to work with big tech, who never wanted to work with smaller, younger tech startups, are now reaching out to us proactively saying, hey, I'm keen to come and build your vision and build your story. I think talent availability is amazing. Customers are now having really conversations on, hey, I want to expand into this market. How do I reduce my cost in these markets? So that's again become very, the investor piece, we're not extremely worried. We're a well-capitalized firm. Most of the well-capitalized firms are trimming cost, creating a profitable outlay. And the whole concept of profitability can be overrated, right? Because if you think about it, all of us can become profitable in few quarters. It's our choice where we choose growth over profitability. And we can always make those tweaks and changes as we go. So I think this is probably the best time in my last 7 years of running Nium. This is the most enjoyable time I've had.
But you need to make a profit at some point.
Correct.
So what is the path to that for you? Still a loss-making company. How do you get there?
Yeah, I think, so for us, we are about 12 months away. So we've got a very clear path of profitability. Last time I was here at CNBC, I mentioned that we were 100 million gross revenue run rate. We are now 100 million gross profit run rate. Like, if you see, the 12-month scale is phenomenal in the business. We're still focused on growth. We will become profitable over the next 3 to 4 quarters. Clear path on profitability, but that's what actually helps us to go public, and that's planned in over 2 years' time.
Okay, and just tell me a bit about the competitive nature of the space, because the place you're playing in specifically is extremely competitive at this point. There's a lot of players. Do you expect some sort of consolidation right now?
Absolutely. Like, I think last year when I was here, I spoke about consolidation. Green shoots have already started. We've now started seeing large assets in the market as well. We're seeing assets between $300 to $600 million range assets being actually put in. Private equity is actually throwing their hat to kind of look at buying those assets. We only see that expanding. Like, for example, we've been very acquisitive. We acquired Ixaris, which was a large European-based payment platform, about 18 months back, fully integrated into the platform. We're right now in midst of looking at multiple acquisitions in Europe, Latin America, and Africa.
Talk to me about the IPO then. 2 years' time, you said, is the goal. Have you given any thought into where you might list?
Yeah, US. I live in San Francisco now, so I think NYC is the place where we would preferably list.